Have you been using volume to make consistent profit in the market? If not, then let me tell you that you are making a huge mistake as a trader in the market. This is because if you only understand the price action, the price movements and the pattern in the market and completely ignore analyzing the volume, then let me warn you that it will be really hard for you to achieve success in the market. The reason behind this, is that you will only be called as half a trader and not a complete trader who is seriously struggling to successfully make a bunch of profit in the market. There is a saying in the market which is, if price is the king, the volume is the queen. That's right. The volume has really high significance and importance in technical analysis. And if you want to become a successful trader, if you want to achieve success in the market and make a huge income, a huge profit out of it, then you have to understand the concept of volume analysis. And in this video, I have explained in detail most of the things that you need to understand about the volume. So you don't want to skip this video, watch it till the end. And if you find anything valuable, anything that can help you make profit in the market, make sure you subscribe to this channel and press the notification bell. And so I welcome you to Tradingfyive. This is the channel that provides you with various informative content on the stock market and technical analysis. And so by not wasting much time, let's start with the video. And let us first start with understanding what is volume. You see, volume are the number of shares that are traded on a particular day in the market. It is the number that indicates how many trades are taken in the market or in a particular share. That's right, it is the sum of total number of shares bought or sold. And let me tell you that analyzing the price along with the volume is really important as a trader if you are using the technical analysis. Do you know that the price and the volume, these are only the two things that the market provides us for analysis. The rest of the tools, the rest of the indicators, including the moving average, has been derived from the volume and the price. So you understand it is really necessary as a trader to analyze the volume along with the price. Analyzing only the price in the market will help us identify whether the market is in uptrend or in downtrend. It will help us to get a clear view about the trend, price movement or pattern. But the volume will tell us whether there is any true significance or any logical reason behind that movement. You will understand this in the further video. And one thing let me tell you about volume is that unlike the line chart or candlestick chart in the market or any indicator, the volume is not depicted in a linear progressive manner. Instead, it is shown using a bar chart, a bar graph, as you can see on the screen. This is what is called as volume. You see, each bar on this volume graph indicates the number of shares traded on a particular day. And one thing interesting about the volume is that it won't tell us when to buy or sell in the market. Yes, you heard it right. It will not indicate when the market will go bullish or bearish or when we should buy or sell. Then a question might arise in your mind, what's all the point analyzing volume? Why it is actually used if it cannot tell us when to buy or sell? You see, there are many tools in the market, including the price patterns, price movements, that will tell you when to buy or sell in the market. But let me tell you that volume has a completely different use. It is an indicator which is used to understand whether a trend, maybe uptrend or downtrend, is strong enough to sustain in the market. Just understand this. The volume tells us whether a buy signal or a sell signal or a trend in the market is strong or weak. And this is exactly what we need to make consistent profit in the market. You can get trade signal using any tool in the market, but volume is a type of indicator which will tell you that whether the trading signal is good enough to make you a decent profit in the market. Now it's our job to understand how to use the volume correctly, how to implement it along with the trend. Along with the price, we make use of 4 scenarios in the market. These 4 scenarios are the ways how the price interacts with the volumes. The first scenario is price rising, volume rising. It indicates a strong uptrend. First, understand what is uptrend. It is a situation where the market is rising, the price is rising, the market is bullish. That's right, we get an uptrend when the price is going up, when it is rising. But how do we get to know whether the uptrend is really strong or weak? That is using volume. You see, when the volume is rising, when there is heavy buying in the stock that leads to rise in the price, it indicates a very strong uptrend. And when I say strong uptrend, it indicates a sustainable uptrend, a trend that stays continuously along with the time. Next scenario is when the price is rising, volume is steady, it indicates a weak uptrend. We know that when the price is rising, it indicates an uptrend. But what is the actual reason behind the price rising? It is of course the volume, the number of buying that is happening in the trade. That is the reason why the price is rising. But whenever the volume happens to be steady or falling in an uptrend, it seriously indicates a weak uptrend. There is actually no stubborn reason behind the market going up. And there might be a condition where the market may reverse the trend or go in a sideways. and there might be a condition where the market reverses the trend and goes into a consolidation. Okay, so the third scenario is price falling, volume rising. It indicates a strong downtrend. Now the downtrend means when the market is falling, the price is falling, the market is totally bearish. Now when the volume is rising along with the price falling, it indicates that there are a number of selling occurring in the stock. The traders are heavily selling the stock and thus it imparts a selling pressure into the stock, which indicates a strong downtrend. So this is exactly how you understand whether a trend is strong or weak using volume. One more scenario, which is price falling, volume steady. It indicates a weak downtrend. You see, every price movement in the market requires volume. Whether the market has to go up or down, it requires buying or selling pressure. And according to this scenario, whenever the price is in downtrend and the volume happens to be steady or falling, it would indicate a completely weak downtrend. The downtrend may not sustain very well or it might go into consolidation. This is how you use volume along with the price. You can maybe just note this down or take a screenshot of it. And let us see the next concept, which is breakouts along with volume. You can see a chart on the screen. It is a daily candlestick chart along with volumes, wherein each bar of the volume graph indicates the daily number of trades taken in that stock. And firstly on this chart, you can see over here a sideways area, wherein the stock is kind of captured into the box. And to get out of the box, it has to give a breakout. It can be either a positive breakout or negative breakout. A positive breakout is the one where the stock breaks through the resistance, and the negative breakout is where the stock breaks through the support. So exactly over here, you can see the price tried to break the box pattern by giving a positive breakout. So any novice trader, any beginner trader who only analyzes the price, what he will exactly analyze here is that he will look for a buying opportunity. But if you are watching this video up till here, you have become smart enough to identify whether the breakout is really sustainable or not. You see, when the price gave a breakout, the volume was not rising. Instead, it was in a little depreciation. So there is no logical reason behind the breakout, as there are no potential buyers in the stock due to which it can give a breakout. So that's what exactly happens. The price then gets back to the box, and so if the novice or beginner trader takes any trade over here, he will be making loss despite of analyzing the price correctly. And this is why analyzing the volume along with the price is really important. You can see one more example over here at this breakout. The price here gave a breakout from the box, but one thing to notice here is that the volume was heavily rising at the breakout. That means that there is a logical and analytical reason for this breakout. And so the stock sustains the breakout and shows a very strong uptrend. This is how you can use volume to identify strong breakouts in the market. This is exactly how the pro traders do it. And even I want you to implement this in your trading. You can use the volume indicator and practice it on charts on a software which I personally use and recommend it to you, that is Tradingfyive, which I personally use and is used by most of the traders in the market. I have provided its link in the description. Also, if you want to open a Demat account with India's leading broker Upstox or Angel Broking, their link is posted into the comments or you can check out the description. So lastly, thank you for watching this video till the end. If you like the video, please hit the like button. Share this video as much as possible and do not miss such many contents on stock market and technical analysis. Make sure you subscribe to this channel. I will see you in the next video.